Hello everyone and welcome to my channel. This is Random Guy on YouTube. Today I will be talking about Qifu Technology. Qifu Technology is a Chinese company that provides online consumer finance services. It offers loans, credit cards, wealth management products, and insurance to individuals and small businesses. QFIN is listed on Nasdaq Stock Exchange and has a market capitalization of $2.5 billion as of August 25, 2023. The services provided by the company are divided into two main segments: credit-driven services and platform services. Credit-driven services match potential borrowers with financial institutions, and platform services include a full range of loan assistance and post-loan services. In the last few years, revenue went up with a compounded annual growth rate of 21%. In 2022, revenue went down considerably, which I think is a result of bad economy and heavy regulations in China. However, it seems that in the last 2 quarters the situation stabilized. I forecast $585 million of revenue in Q3 2023 and a continuous improvement in Q4 and beyond. Gross margin is currently at 84% and operating margin at 28%. These are excellent numbers, but margins got under a bit of pressure lately. But in the last quarter we've finally seen an improvement in operating margin. I expect margins to stabilize over time. Qifu is a very profitable business, and it remained profitable even during tough economic times. Fiscal year 2022 was pretty bad, but in the last 2 quarters the situation seems to be improving. These are my projections for future EPS. I expect over $1 per share in the next quarter. Let's quickly check the balance sheet. It seems pretty good, and the shareholder equity is even higher than the market cap of the company, which means we can buy under the book value. What caught my attention is that receivables are huge and going up quickly, which is obviously what we want to see in a credit business, because these are just loans to customers that should be repaid eventually. The question is, how healthy are those loans? This is a chart provided by the company, and we can see delinquency rate and collection rate. Delinquency rate is easy to understand. It simply tracks the percentage of overdue payments, and it is trending down since 2020, which is very good to see. And if I understand it correctly, the collection rate in yellow tracks how much of the delinquent debt is actually repaid 1 month later. This metric started to improve since Q4 2022. Now let's look at share price and valuation. Qifu investors did not have a good time in 2023, but if you owned the business for multiple years, your return would be pretty good. The PE is at 4.8, which is very low, but for this company it is the middle of the range. My expected forward PE is at only 3.3. Even better metric for timing lows seem to be price to sales ratio, which is currently at 1.2. This is again nothing special, in the middle of the trading range. The best buying opportunities were in 2020 during the start of COVID, and then in 2022 when the price to sales ratio dipped below 0.8. I wouldn't count on it going so low anytime soon, but if you want to wait for better buying opportunity, be my guest. At this time, we can at least know that the business started to improve again. Qifu seems to be dedicated to returning value to shareholders with over 5% dividend yield and with a very reasonable payout ratio. They also approved $150 million of buyback, which represents about 6% of the market capitalization. To summarize, Qifu Technology has a proven track record of revenue growth with 21% compound annual growth rate. The company is very profitable and remained profitable even during economic downturns. The PE is at only 4.8. After about a year of contraction, the revenue and income started to improve again. The company is returning value to shareholders. They have a solid balance sheet. Now let's go to the portfolio update. In the last video, I bragged about how my portfolio is beating Nasdaq, so I got severely punished for the last month or so. But that's fine. My portfolio is mostly correlated with Russell 2000 and the small caps got destroyed again. I'm still beating Russell handily, and time will come when the small caps start to outperform broader market again. In general, I consider almost all my stocks in red to be buys. However, I should mention Tingo Group. There has been a pretty serious fraud accusation against that company, and even though I eventually decided to give them a chance to explain, this investment is very risky and I would think twice about putting more money into it. My latest additions to the portfolio were QFIN, and a week later BXC, and on Friday NXST. So far I am down about 5% on QFIN, and hopefully I will make a video on the latter two stocks soon. This portfolio is only virtual, and its purpose is to objectively track my performance compared to the benchmarks. However, I do own shares of these companies in my real portfolio. I am just a random guy on YouTube and not a financial advisor, and none of the content of this video is a financial advice. Invest responsibly. That's all for today. Thank you for watching and see you next time.